Welcome back. You're watching IndianOpen right here on BloombergQuint Live. Asia as a pocket is trading weak. Geopolitical tensions are weighing heavy across the board. Nikkei 225 is down about 2%. China is trading okay for itself, about 1/3% higher, and Hang Seng down with cuts of about 0.75%, percolating down to the SGX Nifty as well, which is trading under by about 0.5%, 51 odd points given off. Neeraj, good morning. Happy New Year. What did I miss in the last 2 weeks?
Well, lots really. Lots has happened. But I think while there's been a bit of a rally, Devin, I think both of us will agree that while there's been a bit of a rally in the mid caps and the small caps today, because of all the global news flow, it's difficult to fathom that traders will be able to go out and take big naked long positions in an otherwise gloomy global scenario. So maybe a bit of a risk off creeps in today.
Even for that matter, taking a singular directional call is going to be difficult.
Very, very at these levels.
Yeah, and the volatility will continue to peak. Aside from that, it's also heartening to see that the mid caps and small caps are catching up, and the divergence seems to be, the gap seems to be closing up a bit.
Yeah, but that might just unravel a bit maybe this week. If not pull back, at least say a bit subdued. But yeah, I mean, you were right. VIX too has started just inching after hitting those lows, just starting pulling back in the last couple of days, and maybe with reason.
We'll see where the index goes and whether there's some amount of fatigue that creeps back in. But let's also take a look at what's happening in the derivative space. Navneet is joining us with a quick update. Navneet, good morning.
Good morning to both of you. Well, by now we know that the geopolitical tensions weighed on global equities, and so for our markets as well. On Friday, there was unwinding of long positions seen across the board, at least in the index futures. The premium came off sharply on week-on-week basis from those levels of 70 to now 30 points. You can see open interest for Nifty futures was down about 4%. The support for the day will remain. First support will come in at 12,200, which we've been defending at least in the last 2 or 3 sessions. And then 20 DMA becomes very important, which is around the mark of 12,120 thereabouts. For Bank Nifty futures, which breached its crucial support of 32,000 on Friday, though we closed above that mark, but intraday we did breach that mark. There also premium came off by 100 points on week-on-week basis, and the open interest was down about 3.5%, telling you long positions were being unwound when the markets saw some bit of jitters due to geopolitical tensions. India Volatility Index, remember, this is one factor which has been supporting our markets, attracting fresh buying at lower levels, but that too also surged at levels of 12.7. It has bottomed out from those levels of 10.5, which we had seen last Friday. PCR2 fell on account of higher call writing, which came into the system, 1.36 versus previous closing of 1.46. In terms of distribution now, for this weekly expiry on Thursday, which is scheduled on January 9, maximum open interest on the call side is at the 12,300, and on the put it is at the 12,200 put. What we saw on Friday was call writing coming in at 12,200 strike and put writing at 12,100. So the range will remain, watch out for 12,150 and then 12,300 on the upside. Very quickly then, in terms of individual stock futures, you have Max Financial in a weak market touching 52-week high. Fresh longs were seen here. Indigo also witnessed fresh long positions on the futures side. Fresh shorting was seen for Z, which was down about 5% in trade. And then you had ID stocks, which were supporting the index. So Infosys, a heavyweight, saw short covering on the futures side. FI data on the derivatives market is showing some bit of negative bias now, as there were more of short positions being added on the index futures and long positions were unbound. And remember, the ratio now is 50-50% divided. Remember, when we started the series, it was 60-40. Index option heavy position seen on the short side once again. Almost 42,000 contracts were added on the put long side and 25,000 contracts added on the call short side, telling you that the FIs too have been now hedging themselves on the downside by adding more of put longs. With that, it's back to you guys.
All right, Nani, thanks very much for that. Moving on to the most hot topic of today, the fallout of the killing of Iranian General Qasem Soleimani by the US has widened. Iran has abandoned its 2015 nuclear deal and said that there will be now no limit on uranium enrichment in the country. Iraq, on the other hand, has voted for a resolution demanding withdrawal of US troops from the country. The resultant impact is on asset classes like oil and gold. Oil prices are near an 8-month high, while gold prices are near its highest level since 2013. Let's discuss the implications of all of this with Peter McGuire. He's joining us right now. He's the CEO of XM.com. Peter, thanks very much for taking out the time. Brent at 70, WTI crude at 64. Does it look like a situation where you could see extremely lofty prices for crude oil?
Well, good morning. Yeah, I would say so. And I feel as though that the number of key frameworks that we need to understand is that, one, if you put your mind back to September when we had the strikes on Saudi, it was a number of days, if not weeks, until we actually knew who the perpetrator was. We already know who the perpetrator is on this, President Trump, and you've got the Iranians. Iraq is now playing a hardball position, and I think that's going to add increased volatility to the market.
Is there a likely chance that, as it escalates further, there could be an extreme supply cut from Iran?
Well, there could be. I mean, they hold a wild card there, and of course, if they join forces with the likes of Iraq, I don't know how you'd partner a deal there, but that could really create a powder keg position as far as supply disruptions, and that really creates the perfect storm as far as price. So at the present time, it's well and truly bid up, and that's been demonstrated also in the gold market. And now you need to see where we're prepared to go over the next matter of 12 to 14 hours by the time New York comes fully into play tonight, and where the market trades and any repercussions from Iraq and Iran as well.
Just reading through some of the expert and their opinion, suggesting that if Iran actually goes ahead and, blocks access of the Strait of Hormuz, you could actually see a 20% supply disruption coming in from Iran, and that could lead to prices surging. According to you, to what levels? Do you see an 80 plus?
Well, first off, we've got nearly 24% of the globe's crude floating through the Strait of Hormuz. So if you take that supply out, or if something goes dramatically wrong with that supply, then the impact of price is going to be, significant. And I've been following the oil markets for, 35 years, and that creates the uncertainty. So if that's the powder keg, if you see that bottleneck through the Strait of Hormuz being supply disrupted, who knows what the price could hit. That's the reality of the factor. It can jump $10 or $15 in a matter of an hour or two on the market if you disrupt supply significantly.
Peter, just one final question. Neeraj here, good morning. If this
good morning
de-escalates in some shape or form, which is not visible right now, would oil prices still hold, or do you believe that there could be some bit of a pullback as well, fundamentally?
I think there'd be a pullback, but remembering that this is going to be, I think, a long, drawn-out affair, because Iran's not going to sit on its hands, Niraj, quite simply because they've taken their number 3 man out, and I feel as though there'll be some form of retribution, and they're very vocal in that matter of mindset, and I feel as though you'll see something happen over the next week and a half to 2 weeks as far as the supply disruption. So yeah, I think it's a different framework this time round.
Yeah, it is. It's certainly seeming to be a different framework, and I think voices are now talking of strong responses on both sides, or all the sides involved, and which is not good news, or maybe good news for the crude market, but not good news otherwise. But Peter, thanks so much for taking the time out and speaking to us. Really appreciate it.
Thank you, Niraj.
All right, that's the view from Peter Maguire, CEO of XM.com. Avinash Gorakhshekar Johnson right now. Avinash, if you had trading positions on stocks which were strong as well at the broader end or the large cap end, would it be risk off today, starting today? For the near term?
Yeah, I think Neeraj, clearly, this geopolitical tension might escalate, and I think at least in the coming week, I would not be surprised that there could be a lot of action on the commodities like crude oil and equities as an asset class, especially large cap stocks could possibly see a little brunt of selling. Our sense is that the markets could hold on to say 12,000 odd levels for the time being, and as news flows come in, I think the markets would obviously look at it on a day-to-day basis. But overall, I would believe that it's a little risky to actually put in fresh positions as of now. Obviously, IT or pharma, these are the defensive sectors which could obviously play out in the near term. But high beta, stocks could possibly be in for a little round of selling. The SEBI classification also could possibly have a little bit impact on specific stocks, which are now going to move out from large cap to mid caps. And typically, stocks which have been included could possibly see a little bit of buying, at lower levels.
But let's talk about some of the stocks in news then, Avinash. And what did you make of, since you mentioned the SEBI classification, we'll talk about Titan and Adani Ports in a bit. From the list, is there a stock that stands out because of the exclusion or inclusion for you?
I think especially, a gold finance stock, Muthoot Finance, has now come in the large cap category. So I think Neeraj, the numbers have already been quite strong, and I think gold finance as a business has inherently extremely solid advantages. And in a scenario where gold prices are increasing, possibly you could see Muthoot Finance possibly outperforming further. As far as the underperformers, I think stocks like Sterlite Technology which showed a strong bounce. I think this is one stock which has now been put in the mid-cap basket. So possibly there could be some realignment for funds holding on this stock, and that could possibly see a little brunt of selling, considering that the stock has been beaten down, but still I would believe that we could see a little bit of pressure here.
What about Adani Transmission? I mean, that too, the way the stock had recently moved, I mean, not the last 2 weeks, but the last few months has not been bad for the stock. It's just gone from strength to strength.
I think, Devina, in case of Adani Group stocks, rather than the fundamentals, they have a very large trading bias, and I would not be surprised that possibly, some amount of selling or some amount of consolidation could come in the stock. Finally, I would believe that earnings have to catch up, and markets would definitely look at this factor after the stupendous rise in most of the Adani Group stocks. Within the Adani Group stocks, I would still, probably like to bet on Adani ports, because the Krishnapatnam port facility which they have acquired is an extremely very solid asset, and hopefully, if they keep their leverage on the lower side, I would believe that this could be a stock where one could expect a significant amount of re-rating even from current levels.
Okay, that's Adani Ports for you on the big news. We'll get into details of that in just a bit and get an in-depth view from Avinash on the stock. But Adani Transmission also on the AMFI changes included in the large cap segment. We're going to take a slight detour here, go to our research team, come back to Avinash, talk more stocks, but many more stocks that are in focus and what is happening in Bharat Forge. Darshan joins in to talk about that. But Nikki, let's start off with some stocks in news today.
Sure, I'm going to start off with Sobha, where Q3 update has come in and quite good set of numbers, especially after 2 months of degrowth. We've seen a growth coming in, and the management commentary also is positive in terms of pricing. Q3 sales volume are up by 17%. Average realization, however, that's fallen by as much as 11%. Total sales, they've risen by 4%, and the share has risen. The company share has risen rather by 1%. HDFC, good news for borrowers out there. The company has reduced the retail prime lending rate on housing loan by 5 basis points with effect from Jan 6. Dixon Tech, where the company would be partnering with Samsung for manufacturing of LED TVs in Andhra Pradesh. 40% of the revenues now notably come in from these LED TV segment for Dixon. Force Motors, where the numbers look encouraging out there. Domestic sales, they've risen by as much as 53% in this month. And Dishman Carbogen, now do keep an eye out on this one. For the last 4 consecutive sessions, you've seen this counter falling rather than trade, but we expect some amount of positive traction coming in. The company is going to be considering buying back in a board meeting, which is expected to be held on Jan 16th. And IRB Infra, there is a NOC coming in from NHAI for transferring 9 BOT assets to the trust, which in turn GIC will be picking up 49% stake in that trust. Now, IRB Infra has been rallying in the last 1 month, and this news seems to be factored in, but nevertheless, we're expecting it is a positive development for the company as a whole.
All right, Nikki, thanks very much for that. Edelweiss bring out a note on Bharat Forge, Darshan. What are they saying?
So there are 2 triggers. First of all, is the ACT sales numbers that came out for the North America Class 8 trucks. We usually follow FTR, but that's not updated. So ACT has just given the broad number. So they've said that the Class 8 truck sales for NAFTA is for the North American free trade area is basically 20,000 units. So on a month-on-month basis, it's up 14%, but on a year-on-year decline, it's almost 6.5%, which is much better than what the street was anticipating. So counters like Bharat Forge, RK Forging, GNA Axles, all of them will be in focus. The other factor was this Edelweiss upgrade that came out, in which Edelweiss has upgraded Bharat Forge to a buy straight from a sell and hiked the target price to 625 from the earlier 355. So they were rather inactive on the coverage of the stock for a while. What they're saying is that the shift of platform-based models enhances revenue visibility that will come in from the automakers. Exports, according to them, is bottoming out and will actually pick up. And the focus on value-added products is something that has differentiated Bharat Forge, and they're continuing to do that. And that will be the re-rating trigger for Bharat Forge going ahead.
Right, guys, thanks very much for that. So we'll be watching out for all of those stocks in early morning trade. Avinash, you spoke about Adani Ports as being a better bet compared to Adani Transmission. I mean, the asset is good. You've acquired it for a reasonable price. Execution is key now. CLSA has put out a target of 485. Is that justified, keeping in mind all these variables?
My guess is, I think, Devina, the impact of this acquisition could be, fully felt in the coming financial year, that is FY21. And hopefully, if the debt leverage is under control, then I think the markets could possibly start building in some earnings traction and EPS accretion, from the new asset. So I would believe that, yes, probably at these levels, the risk reward definitely looks pretty good. And considering the fact that, after this acquisition, their market share could be in excess of 65 to 70%. So that makes them very, very well positioned and a very strong player, and probably a kind of a monopolistic player in this space. So I would believe that, yes, probably you could expect a significant amount of re-rating, in these kind of markets also.
Avinash, the other stock which is in focus today is Dixon Technologies. Now, it was known that they'll partner a large brand. Now we know it's Samsung as the brand, and it's TVs. The stock is already rallied quite a bit. Does it have more juice? Fundamentally, how do you like it?
In fact, Neeraj, most of the news has got factored into the price, and I would believe that the markets are probably knowing something more than what the actual news was, and I think hopefully once the news is out, it could possibly be a case of sell on news. So I would believe that, yes, this business is definitely going to ramp up their FY21 revenues. But mind you, I think this is a B2B business where margins are not elevated. They have a fixed price contract. So I think it's going to be the volume growth which most of the analysts and the street would be expecting in the next financial year. So I would believe that probably somebody who has entered the stock earlier should actually think of booking out part profits and probably look at holding on the rest for a slightly medium to long term scenario. But fresh buying, Neeraj, at these levels could be a little risky because valuations have run up in the last 3 to 4 months. The stock has galloped quite significantly.
Okay, so you're not moving ahead because of the valuation. Should the stock come off a little bit, the business case still looks okay?
Yeah, business case looks good. Despite being a B2B player, they have a decent kind of OEM kind of client ramp up.
It's interesting, when we get to our technical experts to see how this plays out as a trade, because the stock has already rallied so much in the last 12 months.
Today, a lot of stocks in news, Devina. Titan, for example, right? I'm really wanting to check with our technical experts what happens there, because the stocks came off about 4.5% because it was, at 3 days, I got messages and conversations saying Titan updates will be bad. The update that has come in is probably not as bad as the street feared, and therefore,
it's not bad for the bulk of its business. The revenue contributor is just jewelry business. Obviously, now if you look at eyewear and watches, that's a separate case in point. But jewelry,
the stock reacts on jewelry.
Jewelry, exactly. That's the main core business. And since Q2, since the time they reduced their guidance, since the time they spoke about the weakness in the environment, the stock has just, lost flavor.
Yeah, and therefore, could there be, even in a weak market scenario, a bit of a bounce technically in Titan? Because there were short positions. Thursday and Friday, there were short positions added to the stock as well.
Not to forget that while we are seeing geopolitical tensions, raise the spike in oil prices, gold prices are also surging. So
which is
that could again be the spoil sport in the pack.
Yeah, so actually lots of moving parts here. Fundamentally, Avinash, before we move to the charts, fundamentally for Titan, looking at the price patterns, looking at the business and the update, what would your verdict on Titan be?
No, I think, Neeraj, numbers from the jewelry side, especially the retail side, have been quite moderate. In fact, the street was expecting a slightly better set of numbers. But nevertheless, considering the kind of brand and the kind of footprint Titan enjoys in this space, I would not be surprised that one may not expect some sort of a significant selling. Third quarter may be moderately better than the second quarter, but our sense is that, for demand to pick up would possibly take another 1 or 2 quarters where we could possibly see a strong ramp up on the jewelry business, which is the key business for them and probably the main factor re-rating the stock. So I would prefer that one should hold on. Clearly, I wouldn't be surprised that despite this moderately disappointing kind of news flow, one may not see a very significant sell-off on the stock.
Okay, not significant sell-off on the stock. Okay, so Avinash is obviously playing to the gallery right now as well. The markets are looking weak, so Avinash doesn't want to really go out and take long positions.
Devina pointed rightly that gold prices have gone up. So I think in the near term, there could be a little bit of uneasiness because of this factor.
And it's a very valid point too. Just wondering technically, Ruchit Jain, technical analyst at Angel Broking, joins us on the show. And Ruchit, we'll talk about the markets and your ideas in a bit. But since we're on the topic of Titan, just wondering, there has been a bit of a sell-off in Titan already. What is the probability on the charts of any kind of a bottom? Where are those levels from where Titan could technically bounce back?
Yeah, hi, very good morning, Neeraj. Well, Neeraj, if we look at last 2 months, the entire month of November and December, the Titan has consolidated in this range of 1120 to 1220. So we had a decent gap down opening on 6th of November, and post that gap down opening, the prices have not done much in terms of any kind of directional move. So I think, yes, if you look at the support levels, then the lower end of this range at 1120 is a good support for the stock, and the prices have closed just at above that level at 1140. So today's follow-up move post opening would be much important. If we see the prices going above 1160 during the day, then we could see some short covering move towards 1200, 1220, which is the higher end of the range. But if we look at that is just for intraday perspective which I'm talking about. But if you look at on a positional basis, then till this 100 rupees range is intact since last 2 months from 1120 to 1220, the directional move is not expected. Once we get a breakout either about 1220, then one can expect some sparkling moves in the stock.
All right, that's Titan for you at 1139, the stock right now. Watch out for today's move on the stock post the update as well. On to a special segment, Bloomberg Edge by Yash Upadhyay tells us about a pattern that the Bloomberg has thrown up on a particular stock. Yash, good morning. What's the stock today?
Morning, Devina. So we are looking at DLF, and it has seen a stellar rally from the levels of almost close to 140 to as high as 238 levels. But since then, we are seeing some amount of weakness come in. We saw it happen in Friday's day of trade as well, when the stock closed over 2%, with volumes too being substantially higher. And on the weekly time frame, it has given a big negative call as the bearish engulfing pattern is triggered right at the top. But like we always do, let's first try and understand what the bearish engulfing pattern is and how do you interpret it. It's basically a candlestick chart pattern wherein the second candle is large enough to completely engulf the one ahead of it. The higher or the larger is the size of the second candle, the greater is the evidence of a top forming, and you don't need actually further confirmation with that regards. Now coming back to the price chart of DLF, and this is on the weekly time frame for DLF that we are seeing after 3 successive weeks of gains, and in fact last 9 out of the 12 weeks have been extremely positive when we saw the stock rally from the lows of 140 to as high as 238. It has been a sustained up momentum, and now we've seen this big bearish engulfing pattern form on the weekly charts, this big red candle which is indicating weakness. Additionally, we have confirmation coming in from the RSI as well. So RSI on the weekly time frame touched the mark of overbought territory, so it crossed or actually touched the mark of 70 and has then given a negative crossover. So we are seeing both the RSI as well as the price action supporting that there could be further weakness coming into the counter, and at current levels it looks like the risk to reward ratio will also be favorable for someone going short.
All right, Yash, thanks very much for that. So that's one stock you need to keep an eye out for. Ruchit is still here with us, so let's get down to the index and see what levels one needs to keep an eye out for. Ruchit, let's talk about the Nifty and the Nifty Bank. Any trades open there?
So the last entire week, the index has consolidated in a range of 12,300 to 12,100. So next directional move would be seen only on a breakout beyond this range. So we are waiting for a breakout either about 12,300 to take a buy call again, or let there be a dip towards 12,100, where the index would again come towards its support. What we had seen during this week is that 12,300 to 12,500 call options have also witnessed some amount of writing. So 12,300 would be the crucial breakout level, and we would advise taking a trading or a directional move only on a breakout above the same. Yes, there have been good stock specific momentum during last week. The mid cap and the small cap stocks have specifically seen some up moves. It is supported by very good volumes. So we believe that this risk consolidation in the index would continue for next few more days, and there would be good stock specific opportunities. So we are not advising any trade on the index as of now, but yes, as far as levels are there, 12,100 would be the support to watch, and 12,300 would be the resistance.
Okay. Well, watch out. Supports and resistance is very important this week, though some of them might not even hold if the situation worsens a bit here and there. Ruchit, it is a volatile situation, I know, so stop losses would be important, but we still need some stock ideas. What is it that you are betting on today?
I have a couple of buy recommendations both from the mid-cap front. So one of the criteria that we have chosen to select stocks is the price volume action, where there have been very good volumes along with the price up move. Only those stocks qualify as a buyer now during this uncertain times, because where there are good volumes or delivery based volumes, I think the downside usually seems to be limited in those stocks, even if the index corrects. So Sudarshan Chemical is one of the stock from the mid-cap space which we are quite bullish on. Now after our consolidation of about 2 2.5 months, the stock now seems to be geared for a resumption of its higher degree uptrend. The volumes have been quite good on Thursdays and Fridays trading session along with price up move. So keeping a stop below 392, this is a positional call. One can go long with for target around 488. And Sun Pharma Advance is the other mid-cap name which we are positive on. Relatively a bullish flag pattern was seen in the stock also. The 200-day moving average has acted as a good support in the recent correction. So I think this would be another mid-cap name which could show some good momentum. One can go long with stop below 158.90 for target around 179.
All right, those are some stock ideas to keep in mind. UBS has also upgraded Larsen and Toubro. They've gone to buy straight from a sell. Target price of 1600 is what they've put out on the stock. It's at about 1335. They've spoken about how the company is likely to benefit from the changing economic landscape. Weakness due to near-term misses are actually a buying opportunity, according to them. Avinash, do you agree? I mean, this has been a laggard amongst the large caps and not the one you would probably have made money by investing in. But is this an opportunity?
No, I think just ahead of the budget, Devina, one could definitely expect some sort of traction, because I think, in this budget, hopefully infrastructure will be given a significant boost. And I would not be surprised that, the Jan to March quarter could be a much stronger quarter in terms of order inflows and execution. Clearly, I think at these levels, most of the negatives are in the price, but to expect a significant re-rating in the near term could be a bit difficult. Our sense is that the December quarter could be, moderately weak, and only beyond January to March, one could possibly get a sense as how order inflows and execution takes place. A lot of government orders and working capital stress was discussed in the last conference call. So I would believe that, at these levels, somebody who's got a long-term view could possibly chip in, on every decline.
Okay. While we are looking, we're still about near the record highs. Exhaustion is still not coming while everyone's been talking about a mild correction of sorts. Still, from a standpoint of investing in any of these brokerage houses, in Edelweiss, Motilal Oswal, do you feel they still stand to win?
No, I think given the choice, Devina, Edelweiss, at the current price looks pretty attractive. Considering the fact that the Essar Steel deal is also going to help them, plus they have a fairly risk-free kind of business model. They have a decent share on the broking side, but a large part of the business is now fee-based. So I would believe that Edelweiss at these levels looks pretty attractive for somebody who wants to take a 12 to 15 month kind of horizon, and considering the fact that most of the asset quality concerns are now factored into the price. So I think if you look at Motilal Oswal or typically some other broking houses, I think this is definitely a stock where you could get a fair amount of upside, considering the bandwidth of the management and the business model.
Yeah, it's still down 30% in the last 6 months and about 35% in the last 12 months. And it's not been a great journey for the likes of Edelweiss, but hopefully faster resolutions, at least a boost to the ARC arm, could help it a bit. And they've been looking at raising a lot of equity, selling out stakes.
Yeah, but maybe the market wants to bet on some of the other brokerage stocks, Devina. There's no compulsion of buying Edelweiss.
Sure.
Motilal is doing well. ICICI Sec is doing well.
Yep.
So some of those are just really doing much better for themselves.
Yeah.
Just a couple of other stocks which should be focused on in the session today. Keep that in mind, gentlemen. Viewers, Dishman Pharma, they're going to consider a buyback in the board meet on Jan 16, so that one could react a bit. Force Motors, the numbers looked interesting, and therefore that's the other stock that you need to monitor. And last but not the least, something that Nikki spoke about, Sobha, the Q3 sales volumes has moved up. The sales have moved up after 2 quarters of a degrowth. So 2 or 3 mid-cap names that need to be in focus. Avinash, any thoughts on any one of these names?
No, I think Sobha definitely should pick up. I think very strong numbers on the volume side. But I think clearly, the stock which would be in the limelight today would be Dishman, because after a significant amount of beating after the tax rates, Neeraj, one would like to see how this buyback is executed and how big this buyback would be, because clearly this seems to be a face-saving measure from the management, ensuring that everything is under control. Our sense is that these kind of buybacks which are made by the managements typically don't work out, because if the buyback is small and I don't know what's the kind of cash they have on the books, but clearly I think this could be seen as a kind of a face saving measure unless earnings pick up and these kind of tax problems actually evaporate. I would not be surprised that the markets could possibly look at it in a very positive way.
All right. I think a minute left to go for pre-open. Things don't seem to have improved too much, at least on a global front. Asia is still looking weak. Aside from China, you've got Hong Kong, Japan still under. Japan itself is down about 2%, so a heavy cut there. We're still holding on to losses of about 0.75% for Hong Kong. SGX Nifty, marginal improvement from the last time that we took a check. From 51 points under, it's down to about 39 odd points. Interesting and important watch is going to be all your stocks with crude oil adding to raw material costs, your paint companies, your tire companies, everything which probably could see a little bit of a downward bias coming in. Aside from that, Titan on the update, Adani Ports on the deal of the Krishnapatnam port, all of these stocks to keep in mind. Bank Nifty as well, and what that index does today on the back of some of the larger names like ICICI Bank. Kotak Mahindra Bank, member, had been seeing some amount of profit taking, some selling that came about last week. Whether or not that continues this week is something to be mindful of. 3 seconds left to go. Rupee as well, short chop at 71.81, so we'll see how that reacts. Pre-open on your screen, and as we would have anticipated, but the cut seems to be more muted, more mild. 12,193 is where we are at, but that keeps changing. Sensex for itself is open positive. Adani Ports, not a really big bang move to the announcement, about 1%, closer to 1% higher for Adani Ports. That's at 385. Remember, still very aggressive target from CLSA. Titan, on the other hand, is also open positive. I think that's the top mover right now on the Nifty, on the back of inline growth in the jewelry business of 11%, in line with the guidance of 11 to 13% that they put out earlier on. ONGC, 2.7% higher. Remember, upstream companies nonetheless are going to do well on the back of rising crude oil prices. Z, after seeing a dip on Friday's session, has opened positive. Kotak Mahindra Bank is up about 0.5%. Infosys, L&T at 1338. But the list of losers is much longer than the list of gainers. HDFC Limited is down 3%. BPCL, Reliance, heavy cuts seen there. IndusInd Bank, Tata Steel, Sun Pharma, Tata Motors, everything's down and out in today's session. However, that's about it. That's the largest cut that you've seen, 3% on HDFC Limited, and the rest are down about 0.5%. 72 crossed for the rupee, 72.04.
Yeah, well, it's down. It's gone one way and shouldn't surprise you. The yields might be a different story because, as Anand had said earlier, you don't bet against the Reserve Bank. So we'll get to that in a bit. The yields should come up any moment. Just wondering what the oil sensitives are doing. So the likes of HPCL should come up on your screen, and let's see what that stock is doing in the session today. Likes maybe. Well, I don't think it'll be down 9%, but maybe there's a bit of a downtick. Let's wait and watch. The likes of Ceylon Exploration and HOEC would be the other interesting ones. Small names, but could be active. And aviation should be an interesting one. By the way, there is much more being spoken about Indigo as well. Again, this 10% downtick, I don't quite know about it, but both SpiceJet and Interglobe might be interesting with crude prices moving the way they are. Maybe there is a fundamental case for or a sentimental case for a downtick coming into these names, so aviation stocks. And we'll talk to our experts about the trade out there too, but these are the interesting ones to monitor. Watch out for, a lot of traders and a lot of people in the market might want to act upon tire companies, act upon paint companies because of the uptick in crude prices and the belief that crude prices will only move higher. So you got to watch out for JK Tire, you watch out for Berger Paints, Shalimar, Asian Paints, etc. All of those could be in focus. So you never know which stock will react how, in which fashion, and what time of the day and on what day. But all of these stocks should be kept at the back of your mind because of the uptick in crude prices.
But the mood itself, just is.
The mood itself, I mean, that's the overarching thing.
Yeah.
The mood itself is not too positive. Before we move further with other calls, let's get in Somit, who joins us with the top brokerage calls for the day. Somit, we've already spoken about the yield-wise view on Bharat Forge. What else stands out?
Well, firstly, UBS on L&T, where they have upgraded the counter to a buy rating from a sell and have hiked the target price to 1,600 rupees from 1,400 rupees. Now, according to the brokerage, the leader, that is L&T, is likely to become stronger and is well placed to benefit from the changing landscape. Now, by landscape, the brokerage means the change in investment composition trend, which could accelerate going forward. Now, the share of complex projects has increased from 13% over FY09 to 11 to 30% over FY17 to 19 in value terms, and this trend should continue and increase going forward, says the brokerage. The brokerage also says that they might be early in this call and would view any weakness driven by the near-term misses as buying opportunity for L&T. And lastly, it sees growth stagnation resulting into fiscal pressure depressing infrastructure investment as the only key risk to their investment call. The second one is on Apollo Hospital, where Axis Capital has maintained its buy rating but have hiked the target price to 1760 from 1680. Now the brokerage sees a strong visibility of sales and EBITDA growth post their management meet. Now superior clinical outcome led by Center of Excellence is the key differentiator for Apollo Hospital, says the brokerage. Along with this, moderating capital expenditure coupled with better financials will improve the company's return on capital employed and free cash flow going forward. Now, the company is not looking for any large M&A but still remain open for any small to mid-size scale opportunity, according to the company. Lastly, the issues related to promoter pledge and debt will be resolved as the company looks to unlock value in its health insurance and front-end pharmacy business, says the brokerage.
Right. Samit, thanks very much for that. So those were some important brokerage calls to keep in mind. Also joining us right now on the show is Ashish Chaturmutha on the technical side. Ashish, great to have you. Let's talk about individual stocks first before we get onto the index, because it's going to be that kind of a day where the index doesn't do a whole lot much. Maybe stocks do better, sort of speaking. So what would you be watching out for?
Good morning, Devina. So I think yes, the broader market might see some kind of selling pressure, but still we believe that individually stocks are in a good trend, and I think because of the kind of uncertainty, the first space which looks promising is the pharma basket, and within that I think Torrent Pharma is one stock which has seen a very strong OI addition in last couple of few trading sessions. There is a strong trading activity and technical breakout on the weekly charts. So I think here one can initiate a long 1875 would be my trading stop loss. 1970 is a short-term target in Torrent Pharma. PVR is one stock where the structural trend is still positive, and I think on the Friday also we saw a good recovery from the lower levels. So I think here one can initiate a long. 1835 would be my trading stop loss. 1950, 1960 is a short-term target one can expect in PVR. Lal Path Lab in the cash segment is showing a good traction on the weekly charts. Stock has held on to the 1500 mark, which was a very strong support zone. So I think with a stop below 1510, one can initiate a long. 1620 is a short-term target in Lal Path Lab. And one short call is in the PSU banking basket, which is Canara Bank. Stock has seen weak setup in the last 3-4 trading sessions. So here one can initiate a short. 225 would be my trading stop loss. 214 is a short-term target on downside in Canara Bank.
All right, both Dr. Lal as well as PVR are the mid-cap inclusions in the AMFI list. But watch out for all of the names that Ashish spoke about. Ashish, it's important to see if we break 12,100 today on the Nifty, what happens then?
See, I think yes, you rightly mentioned what is critical is 12,100, and that's going to decide the trend of the market. And I think till we are about 12,100, although there is a short-term weakness, we assume that it's going to trade sideways between 12,100 to 12,300. But definitely any breach below 12,100, and you are going to see huge, unwinding of put writing positions which has been created at 12,200, 12,100 kind of zone. And once that unwinding starts to happen, then I think below 12,100 there can be a dip towards 11,900, 11,850 kind of area. But the point is 12,100 is going to be an important support area, and we really need to see whether we break this 12,100 decisively or not.
Well, still about 0.5% away. Let's wait and watch. As the pre-open rates have settled down, we're down about 0.5% for all the three key indices. So that's where we will likely start off. The question is, can we do better? Two stocks which are bucking the trend on the large cap space are Titan as well as Adani Ports, both on expected lines. Let's see if they manage to scale up further, or do they enter into some bit of selling as well after this. Adani Ports actually not as strong a reaction as maybe what a lot of people would have anticipated. But the stocks that I want to get a quick reaction on, both fundamentally and technically. Ruchit, to you first, technically on Interglobe Aviation and SpiceJet.
So in Friday's session, we had seen some up move in Indigo, and if you look at the recent past, then the stock has already seen a decent correction from its high of 1,850. So I think some pullback move could be there in the stock towards 1,450 kind of levels. 1,275 remains a very important support for the stock, which is the recent swing low. So till 1,275 is intact, the momentum could be some sort of pullback move towards 1,450, 1,460. Now SpiceJet already has seen a good up move in last 2 or during early last week, but then again the last couple of days have not been so positive for the stock. So I think on the higher side, 120 remains a key resistance for SpiceJet, and until we see a breakout above that same now, I won't advise to create any fresh longs over here.
And Avinash, fundamentally, with crude doing what it is doing, if you had an investment position as well in either SpiceJet or Interglobe, I don't know whether you like them or no, but if you did, would you just take some chips off the table? Because right now crude would be the overbearing theme on the aviation stocks too.
Yeah, I think, Neeraj, at least in the near term, I would not be extremely positive on both either Indigo or SpiceJet. Indigo obviously has several other problems, on the promoter infighting and the, engine technical issue. But overall, I would believe that, the third quarter may not come out exactly as per what the street is expecting. So it's better to stay away for some time before we actually get a trend on the crude price, because this is definitely going to be a severe negative, kind of news flow for the airline companies in the near term.
All right, Dixon Technologies, we already spoke to Avinash about the fundamentals. 93% in the last 12 months, Ashish. Is there still more headroom?
Yeah, in fact, last week we had a call on Dixon Technologies in your show in the morning as a cash segment idea, and where we had recommended a target of 40 to 50 kind of zone. I think clearly the structure is very, very promising on the weekly, monthly, all chart frames. This is a breakout, and if you look at in December 2017, the stock made its all-time high of 4,500, and then there was a breakout which took place recently above 3,850. So I think 3,850 itself is going to be a very, very strong support zone for the stock. Positionally, I believe 40 to 50 is first indicative target one can expect, but the kind of positional chart setup is developing. I think stock is poised to hit its previous all-time high zone of 4,500 levels.
Okay. Stay on with us, gentlemen. Lots more to talk to you about, but we're minutes away from market opening, and we tell you all that you need to know to stay ahead and trade today. Titan is expecting to post an 11% growth in its jewelry segment for the third quarter. In its quarterly update, the company has said that the consumer sentiment continues to remain weak.
Adani Ports looks to expand its presence on the country's eastern coast. It will buy 75% stake in Krishnapatnam Port from Hyderabad's CVR Group for 5,520 crore rupees. Soba's
third quarter sales volumes rises 17%, while average realizations fall 11%. Sales rose after 2 quarters of degrowth.
The Economic Times reports that State Bank of India plans to sell 1% stake in NSE as part of its central capital raising exercise. It currently holds 5.2% stake in the exchange.
And Dixon Technologies will partner with Samsung for manufacturing LED TVs in Andhra Pradesh. About 40% of the company's revenue comes from the LED TV business.
Lastly, in key brokerage calls, UBS upgrades Larsen & Toubro to a buy from sell. It has also raised its price target to 1,600 from the earlier 1,401 rupees. And Bharat Forge is the other interesting one, which should remain in focus. Now, just before we thank Avinash Gorakshekhar. Avinash, just one quick word on HPC. A little, again, react a bit to the crude price upticks today. But if you're a long-term viewer, would you look at HPCL?
I think most of the oil marketing companies, Neeraj, in the near term could underperform. But I think hopefully, once the BPCL deal happens, you're going to see a lot of re-rating on the OMC, side, considering the fact that the markets are expecting that this deal may happen now post-March. So I would believe in the near term, somebody who has a position should hold on. I would not be surprised that one may not see a very big panic sell-off here. But yes, in the near term, re-rating is going to take some time. At least in the next 3 to 6 months, it could be a market performance.
We'll leave it at that, Avinash. Thanks much for taking the time out and being with us and giving us your perspective. Really appreciate your time. Well, that's the view from Avinash Gorakshekhar on some specific names that you need to monitor in the session today as well. Well, the pre-opponents have settled down. A quick opening thought from Nischal Maheshwari, CEO for Institutional Equities at Centrum Broking. He joins us, and then, of course, we'll continue our conversation with him post-market open. But Nischal, in a nutshell, good morning to you and a happy new year. But do you reckon that while there was a bit of a mood of a risk on last week, it gets tempered because of the geopolitics?
Thank you. Morning and very happy new year to you and the whole team across at Bloomberg. Yes, I agree basically. I think it was a good opening basically, but I think this was totally unexpected. And let's see basically if there is escalates. If it escalates, I think it's going to be a dampener across the world basically, and risk on, which was coming on very strongly across the world, might take a back seat for the moment.
Okay. Nischal, we'll come to you, and to get your thoughts on various moving parts of the market. We're just about a minute and 30 away from market opening. So keeping it with that, just getting some quick thoughts from our technical experts as well. Ashish, one stock, which is Avanti Feeds, now it's sub 600. Is that a good window to enter?
So yes, I think here again the weekly setup is very strong, and I think the dip is offering a good opportunity, because on the weekly setup I think 575 is going to be a very strong support zone, and if these levels are held on, then I think up move towards 655, 660 in immediate short term is what one can expect in Avanti Feeds.
Okay, quickly then, top calls for the day for both our technical experts. Ruchit, let me come to you first.
Well, I expect continuation of this uptrend in NIT Technologies, so that would be my top call for the day. One can go long on NIT Technologies at opening around 1625, keeping stock below 1580 and expect near-term targets of 1700.
Ashish?
So Torrent Pharma, here the weekly setup is very strong. 1875 would be my trading stop loss. 1970 is a short-term target one can expect in Torrent Pharma.
Very interesting, we are getting long calls on the stocks. Ashish, quick 20-second call. The Bank Nifty starting off 0.5% lower. Would you initiate any trades here today?
Here some weakness cannot be ruled out. I think on downside 31,800 to 31,750 is what one can expect in Bank Nifty. So I think if it opens around 31,910, I think another 100-150 points down take from that level could not be ruled out.
Okay, Ashish as well as Richard. Gentlemen, thanks so much for joining in today and giving us your perspectives. Appreciate your time. But here's how the markets are starting off. In the red, naturally so, about 0.5%, again on expected lines for the Bank Nifty, about 189 odd points, 0.6% lower, dragging the Nifty and the Sensex along with it, so about 190 or 200 points for the Sensex, and nearly 63 points or 0.5% for the Nifty 50 as well. The mid caps and the small caps may not be starting off too differently. In the red, at least the mid cap index, 0.65%. The small caps may be a bit more resilient, but let's see if this changes. By the way, the Nifty Bank is now quickly slipped to down about 1%. Just pull up the Nifty Bank once again before we move to the benchmark stocks. Okay, let's talk about these and then we'll talk about the Nifty Bank again. But the Nifty Bank is nearly 1% lower in trade. You've got to keep that at the back of your mind. Which banks are pulling the Nifty Bank down? So there is State Bank of India, which is down about 1%. HDFC is down about 1%. HDFC Bank is down about 1%. Now you know the reasons. ICICI Bank, HDFC Bank, State Bank of India, all three are down. Axis Bank is down about 1%. So the heavyweight banks are correcting, and that's why this pressure on the Nifty Bank. But as you look at this grid map, I mean, overwhelming red, just 5 stocks in the green, which includes some IT names, minor gains to Adani Ports and Titan about 1.5%. That's about it. Almost all the other stocks in the red. Bajaj Finance has come out with a strong update, and therefore maybe that is a bit more resilient, just about 0.15% lower. But a clutch of stocks correcting, no big cracks otherwise, but a clutch of stocks down about 1.5%. Reliance too is trading with a bit of cut to itself. And mind you, the top loser is not BPCL. Power Grid, Hindalco, Coal India, Asian Paints. That's the list of stocks that are ruling the roost as far as the losers go. Top of the pile of the losers. Very quickly, across the broader end of the spectrum too, let's see if oil is creating some bit of flare in some of the other sensitives. So likes of HPCL, oil exploration companies, etc. Ceylon is up another 1.5%. HPCL is down about 2%. Berger Paints is down about 2%. So the oil spike and the resultant impact that we typically see on these stocks is being seen. Just a handful of other stocks as well, which we should be monitoring. So losers, key losers last week, Piramal, Sun TV, Whirlpool, all of them start off week. I just wonder that one stock that I want to mark on the positive side, Dixon Technologies, and how well it has started off, about 1% higher, nearly 4,000 because of the Samsung partnership. Devina, what are you spotting?
Well, the few penny stocks which have made gains today, one, Suzlon continuing from last week is up about 5.5% today. You've got IOB, which has moved up 4.5%, so it's now at 11.5 rupees. UCO Bank at 17 is up about 3% Remember, there has been some fund infusion in some of these banks. You've got MTNL, which is up 2.5%. The likes of Gen Irrigation, smaller name there, which has moved up too. Hathway is up 1.5% this morning. You've got Divan Housing, you've got Jagran Prakashan, Lakshmi Vilas Bank doing well. Oil India is up about closer to 1%. Bharat Forge, remember we spoke about Edelweiss and the note that they put out on it. You've got Network 18, Intellect Design, some of these names doing well. But again, the flavor is hugely tilted towards the negative side. Losers include the likes of a Navkar Corp down 6%, Arcom down 6%. You've got the likes of an ITD Cement, which is down 4.5%, Karur Vysya Bank, Hindustan Copper, Syndicate Bank, HDIL, VA Tech Baba. Remember Friday's session and the last week itself for VA Tech Baba wasn't all that bad. Some profit taking on the stock today. Shipping Corporation, MMTC, Minda Corp all losing out. 262 stocks advancing versus 958 stocks which have declined. So you can see the kind of tilt in the market breadth as well in the session. Nischal Maheshwari is still here with us. Nischal, now the key focus, obviously, aside from the geopolitical tensions and issues that we've already spoken about, is going to be the budget session that happens on the 1st of February. Do you feel that the market ahead of that, could take some cues with regards to moves in specific sectors like infrastructure, cement, anything that could anticipate a fillip?
Not much actually. I don't think so. There's, if you really look at it historically, I think most of these sectors have now been, there's nothing to actually declare in terms of budget because they are now largely governed by the GST Council. So I don't think so anything will be impacted. I think the more is the macro news, basically how government is actually going to look at the fiscal. And if I look at the numbers in the first 9 months, basically I don't have government has enough room to do anything more about after what they've done after in the corporate tax cut. So I don't think so there's going to be much to look forward to in this current budget.
While obviously the street is ripe with talks of personal income tax cuts, the quantum of which obviously will not match that of the corporate tax cut, but any money saved in the hands of the consumer, do you feel that could in a way spur consumption?
So we have to really think about it basically because there are like in the clearly the higher income brackets where you are going to cut taxes really do not matter to consumption. It's only the lower end basically up to I think 10% basically which people are paying taxes, that is around 1.5 crore of taxpayers. Now 1.5 crores, if you give them a SOP basically, how does it impact the whole country? So I think government has to find a more efficient way to distribute rather than actually just cutting the taxes. So I don't think so this is an effective way to cut taxes. To boost consumption.
Okay, Nischal, the other question, of course, that we started off with was what happens in the scenario of the risk off that we have right now. Now, it seems to be a situation that will not de-escalate anytime soon, even if it doesn't escalate meaningfully. So would the base assumption, having looked at these markets for so long, would the base assumption on your end be that for the near term we might see crude stay elevated or move higher, and therefore the markets remaining in a risk off, even though the risk appetite for small caps in India was just returning back? And can earnings change that situation a little bit?
So I think there are 2-3 questions you have asked me basically. Will crude remain at an elevated level and does it impact India? So anything which at more than $70 obviously impacts India basically. So that's a pretty well known fact. Now will the earnings really impact? I don't think so. Earnings is coming back in a hurry. What was happening basically, why you saw a bit of a rally in the mid caps was basically the rumor that SEBI's list of mid caps and large caps is going to get enlarged, and it is going to go beyond the 250 stocks. And there were rumors doing the round basically that it will be around 400 stocks, and a lot of names were already started getting circulated. So I think that's what actually set the whole thing on. I do not see a fast recovery in any of the corporate earnings, especially on the mid cap and small cap. You have to understand basically there is a liquidity issue basically, and liquidity especially at the far end of the guy standing on the last mile basically doesn't get liquidity rather than and also get worse off rates. So in this kind of a situation, basically, I don't see that earnings are going to be coming back strongly for the mid caps and small caps.
What is your own estimate with regards to how this year could be in terms of the Nifty earnings?
So Nifty, we are still talking about around 10 to 12%. That's what we think basically is going to end up with. I think next year, yes, as every year, basically we start with a 20% and then keep on going cutting down. But I think around 12% earning is what we are assuming this year.
That's the most pessimistic scenario, or that's the realistic scenario?
I think this is more or less a realistic scenario.
All right. Nischal, then, what does one do in terms of fund allocation? I'm asking from a retail standpoint.
So I think retail should still stick to large cap funds if they are investing in funds. If they are buying stocks basically directly in the market, I think from a retail point of view, they should stick to quality. And there is no hurry to go out and buy the mid caps, because we really do not see, unless you have quality mid caps basically, where the question of corporate governance or other things are not there at all, then you can start looking for some value in the mid caps. But just going down for the reason you are expecting that the economy is going to recover fast, I do not see any of the three legs basically in the economy coming back. You have issue of consumption. I don't think so investments are coming back in a hurry. So both the legs are, and exports are clear a dampener for us. So you look at all the three legs basically in our economy right now, basically trying to figure out how do they stand back. So it's going to be a bit of a long haul.
Nischal, in such a scenario, Bajaj Finance has just come out with its quarterly update and they have seen their AUM grow at 35%. I haven't quite looked at any comments on the asset quality right now while doing the show, but with a presumption that Bajaj Finance does what it does, which is not pursue growth at the expense of asset quality, 35% AUM growth in Q3, would that lead you to believe that this whole conversation that we've always been having, that the market is right now ripe open for companies which have the capital to grow at the pace at which they want to grow, would mean that the market would continue to give higher valuations to these names like Bajaj Finance, HDFC Bank, for example?
Now, valuations, I don't know basically whether market should be giving higher valuations from here also. We do not track Bajaj Finance, but if I remember it right, it's around 7, 8, 9 times whatever number basically price to book. So I don't understand how you give this kind of a valuation. But anyway, I think besides the valuation, this winner takes all kind of a thing is still happening. And I think at least for a couple of quarters, it's going to be the same thing. And now you're saying that if the inflation is going up, basically rate cuts, maybe the last has already happened. Now, I think this is in this kind of a scenario where the cost is not coming down and the rate cuts are more or less past, are behind us. I think the guys who have the balance sheet quality, I think they will keep on gaining more market share.
Nischal, correct me if I'm wrong, but from the last time that we spoke until now, you seem a bit more bearish than what you were then. Is this a market-wide opinion that you have, and therefore would you believe that the levels themselves will come off as well, or would it be very stock-specific, even if the market were to have a bearish undertone in the near term or the medium term?
See, market Nifty is a totally different thing altogether. It is just driven by around 10, 15, 20 stocks, and it may continue to be driven by that. So I'm not talking about a Nifty level saying that Nifty will, can it go to a 13,000 level? Possibly, because the top 10 stocks will keep on taking it up. Now, that's what you have to understand the scenario. When I was trying to tell you that there is a consolidation of market share which is happening towards the large guys, they will continue to perform. So Bajaj Auto still shows you a 35% growth. But if you go down to the second line of NBFCs, they will actually show degrowth. Now, how do you actually then clearly look at it and say that the whole market is growing? No, the whole market is not growing. You have got a credit growth of only 6-7% in the economy. So it is not that the whole market is growing. It is a few players are growing basically because they have got a free runway, plus they have got access to capital. So they are making the most of it. And I don't blame the guys basically who are just putting their money where the guys are doing well.
Right. Nischal, then what happens to some of these non-lending NBFCs which have been doing well up until now? Is 2020 going to be an equally fruitful year?
Sorry, if you can name them, non-lending.
Yeah, so your insurance companies, you know, you've got your AMCs, all of these.
Yeah, they will definitely do well basically. They will definitely do well because once again AMCs, I've got a very, very strong view on AMCs. I believe this is a 5-year to maybe 5-10 year kind of a story. There is nothing to stop AMCs. Will they, now there will be years basically where they may grow just at 10%, but I think on an average a 13, 14, 15% kind of a growth for next 10 years is a very much possibility. Similarly for insurance. So I think these are much better stories to be in rather than actually pursuing any of the NBFCs at the moment.
But you comfortable with the valuations out here, Nischal? I mean, I know growth is there for both insurance and asset management companies, but you comfortable with the valuations?
So I think you will find pockets out there which are still good, like Max Financials. Basically, it's a good insurance company. I think it's available 2.5 times price to book now. ICICI Pru Life, I think it is the cheaper of the lot in case of insurance basically. And then in case of AMCs, I think only 2 are listed at the moment, but UTI is most likely to get listed in the current quarter, so you will have more options. And then obviously you will find cheaper valuation. Still, I think Nippon at the moment is, I think, at least 25 to 30% cheaper than HDFC AMC. Now, you can say, but I think in this kind of a scenario where you got strong cash flow companies, 15% kind of a growth visibility in 5-10 years, I think it's a good place to be in.
What about telecom as a space, Nischal? Lots has happened in 2019, but you've still got the likes of a Reliance, which is holding a stronger fort. Do you feel that 2020 could be, a year where ARPUs will likely, once again rescale 150 odd?
So I think it is true basically. I think the ARPUs are bottomed out in India. It is too early to say, because I was just reading today's newspaper where most of the companies saying it is too early to say after the price increases happened whether the volumes are going to fall or not. But I think voice I don't see falling. Maybe data usage basically, as people get attuned to paying higher, maybe some fall in data usage may happen. But I think more or less you will have a rising ARPUs. But what you have to see is basically, has it risen enough basically to cover their costs? So that is what the more challenge is for the industry, rather than actually saying that whether the volumes are going to sustain or not. So I think that way the stocks have already priced in quite a bit of run up. So I think at the moment it's sort of on hold for us.
Okay. Nischal, my final question really, do you think this whole the whole argument of how the resolution of cases and therefore money is coming back to the corporate facing banks and even the largest PSU bank might just, that enthusiasm on that trade might just now die down. Some of the stocks have rallied as well, but with this whole conversation around how the economy is not quite going up, and if there is some bit of credit crisis coming out, not crisis really, but credit issues coming up again, which might hamper the sentiment, is the narrative on hold for the time being? SBI, ICICI Bank, Axis Bank, the likes.
So I think each of these banks basically, yes, it's though they are broadly put into corporate banks basically, but you have to see it slightly differently because each of them has separate triggers. So in case of SBI, I think it was multiple triggers basically which you are seeing, and that, by the way, remains to be a topic in the all the three of them. And beside it being cheap, I think NCLT, if there was a possible recovery in the economy, yes, once again it will be the biggest beneficiary. And then there are several of them, SBI cards, IPO and all that. So I think there are several triggers for SBI. Similarly for, I think in case of ICICI, I think it is more to do with that the growth might start coming back for them, and they have now for last 2 or 3 quarters not surprised anybody, so people are more comfortable with the valuations there. Axis has yet to get its act together, basically how they are actually going to be presenting it forward, because when the new MD came, it was a bit of an aggressive pronouncement, and thereafter I think they have taken a bit of a back seat. So I think they need to get their act together before they want to move forward. So each of them have its own thing basically, but broadly, is the trade still on? I still believe that the trade is on. I do not see any reason for it to die away at this moment, because sooner or later, so what I am trying to say here is, yes, economies now hit the bottom basically, but it may remain at the bottom for a couple of quarters before recovering. That's what my thought is basically. I am not trying to say we are going down from here. We are trying to say basically is that it will take time for us to recover, because we need to, because you cannot just trigger the economy back onto action. It will take time for it to recover, people to get confidence back, to start spending the money. You can give enough money in the hands of people, but if you don't have confidence, people will still not spend it. That's what I'm trying to tell you basically. So it will take time for people to get back confidence, and that's why it will take a bit of time for us to, and we have to remain at the bottom for some time and then start going up.
All right. Nischal, as always, very insightful chat with you. Thank you so very much for joining us this morning.
Thank you. Thanks a lot.
Nischal Maheshwari there with his thoughts on the market. Mohammad Apabai of Citigroup is hoping that better sense will prevail in the escalating tensions between US and Iran. In a conversation with Bloomberg Television, Apabai said that any correction in the market will be aggressively bought into, and why he also believes gold a good hedge is a good hedge at this point. Listen in.
Overall, though, I think people are still being quite measured in the way that that they're looking at it. Like if you look at the market reaction, it's down about 1% off something that was already quite elevated. So I think there is concern, but I think very measured in terms of the market reaction, at least so far.
We obviously had a very good December for risk assets. You mentioned January too, very good optimistic mood then. If I was waiting for a buying opportunity, is this it?
I'm not really that convinced that you're going to be getting that buying opportunity. I think what the other thing is that, you know, in December, for example, we saw a massive expansion of the Fed balance sheet yet again.
Right.
You know, in the fourth quarter, I think we saw something like $330 billion of expansion, reversing almost half the tapering that we've seen. That's the biggest pace of expansion since 2008. So we thought that in early December, you know, because of this repo stuff that was going on, that there might be this pullback, and I think the pullback lasted about 2%. So any pullback that you're going to see, at least in the first couple of months, is going to be, I think, fairly aggressively bought into.
Mo, Tom here in Beijing. When you're looking at gold, it's at its most overbought level now in 2 decades. I've got a terminal showing this. Is there more upside for the yellow metal given the risks in the Middle East?
I think there is more upside for gold, but I think partly it's to do with the risk in the Middle East. I think it's a nice hedge to have. In fact, our commodities desk this morning has been reporting some very significant activity in gold and in oil, as you would probably expect. That's just off the get-go, even before sort of 8:30 this morning. Hong Kong time. But I think the other thing is that the dollar has been weaker, especially since the end of September, and that is also helping gold higher. So our view has been that the dollar would be weaker, at least in the first half of 2020, and that sets up quite nicely for gold, and also that's quite positive for gold, especially when we have these geopolitical tensions making people a bit more concerned as well.
And is that weak dollar then still supportive for EM? Can we assume particularly that Asia can be relatively insulated even if there is a flare-up between Iran, the US and some of its allies?
Well, obviously, if there's a significant flare-up and there's a significant escalation from where we have over here, then Asia will fall very much into that pattern that we've seen many times before between the net oil importers, like countries like Japan and India, and the net exporters who may be a little bit more defensive. But at the moment, I think we're still watching and waiting. What I would highlight as well is that there is a calendar effect on this as well. Remember, the trade talks are going to be signed on January the 15th. It's going to be about 2 weeks while we're waiting to see what happens out of this Iranian situation. And of course, we do have this Senate impeachment trial hanging over all of this as well. So there's a few things, a few moving bits that are coming in at the moment on the geopolitical side. But we also have earnings season that's going to be beginning as well. So long as there isn't any real impact from on earnings, and as long as there isn't a very significant rise in the geopolitical discount, then I think we should be relatively okay. But we're obviously cautious and watching this.
Talking about Brent at $70, do you think the geopolitical risks have largely been priced in, or do you think prices could stay elevated and maybe go even higher overall, given the fact that what we've seen so far, we haven't seen any kind of end game here when it comes to the U.S. and Iran?
Yeah, I think the market is still, I think, pricing in this sort of scenario where, yes, there is a bit of saber rattling. Yes, there may be some action, a little skirmish here or there, but nothing much more significant than that.
So similar to what we saw in September with that Saudi facility.
Correct. Yeah. And one thing that was interesting around that Saudi event was, again, there was anticipation. And some people we were talking to were thinking that oil prices were going to go to 100 and whatever, and they never got anywhere close to that. So I think the market is still hoping that good sense will prevail, and that things will eventually calm down again.
Well, coming up, new projects announcements showed an uptick in the December quarter after continuous decline during the rest of the year. We discussed that and other findings of the latest CMI report with Maheshwari.